Hello and welcome to Macro Mondays, brought to you by David Gokhshtein and the Gokhshtein News Network. I'm your host, Landy, and today is January 12th, 2026, and we're looking at silver. Why? Because it's such a hot topic, and it's hit, well, one of the key areas that I was talking about above 85 or above 83.75, the prior high. We got our $85 target hit in yesterday's candle. Open at 80, close at 85.09, high of 86.23. And silver is playing in that zone between 85 and 88, has a chance to even go for 90. Maybe even more. If we do see things aggressively spike to the upside above 90, you can start looking 92 to 95 by the upper third there. 95 being, of course, outside of the upper band. But realistically, what is that going to be contingent on? As I mentioned, after Bitcoin, after silver hit that 83.75 target, which was right on a fib level that I've had on the chart for quite some time, it pulled back and held 70 on a close, and that's really what it needed to hold in order to continue to the upside here. And while I still believe that it has more upside potential, even if it does correct from here, there is some criteria to be aware of. So directly overhead, we have the two-spot fib extension right around 88. So like I said, 85 to 88 is kind of the main area here. Swings to 90, but closes above 88. It's going to start to look like 90 to 95 is fair game, possibly even up to 98 to $100 and slightly above. I do think, though, on the longer term time frames, we will be seeing a wider correction. It's just a matter of, where does it come from, whether it be here or higher. And I do think it's going to start to occur from a weekly time frame, but this still has juice even then to chop around the highs. So just understand that as well. That even when we do see a wider correction on the weekly, it could still chop around the highs and potentially even making new higher highs, because we do have the upper third standard deviation of the Bollinger Bands here on the weekly now pushing 95 week over week. Even if we were to see a correction from here, this is going to continue up into the 98 to 103, 105 area. So the big thing is now, from the weekly standpoint, we need to see 70 hold up to the downside. And that's realistically where the upper first is on the weekly. Otherwise, we're in for a deeper correction that could come all the way back to the basis, mid 50s, probably or possibly even swinging below there to hit the weekly over here, 55 to 51, somewhere around that $50 area. And that would still be incredibly bullish on longer term time frames, as long as it held the last weekly high or low, which is all the way down at $45, with the close open coming in around 48. In this case, 48.32. So this still looks like it wants continuation. It still looks as though it can continue, even if it gets a correction from here, chopping around the highs, and even making higher highs. That's still very viable for silver. And on the daily here, you can see it's sitting right on the 1888 Fibonacci extension that it originally hit around that 83.75. So sitting right on top of that. If we do see that lost, look to around $79 to $80. So basically $80 even. Anywhere below there, the last higher low is in danger on a close on the daily at right around $77 to the actual swing low there at 73.86. That's also right around where the basis band is coming in. So if we do see a break of structure, for instance, if this doesn't push any further towards the 88 to 90 area and above, to maybe even hit the low 90s by the upper third, around 92, 92 and a half or so. And let's say it corrects from here. If we do see it start to break down below 77, look right to that low. It needs to hold that swing low at 73.86, almost $74. If that's dropped, That's also the basis band that's dropped. We're likely looking right back to the $70 area, which again is that key area on the weekly, which is right around the upper first standard deviation. Needs to hold that to hold off a wider correction, um, especially coming into like a Friday. So something to pay attention to this week. Keep in mind, this week, keep in mind, I'm just telling you now, this Wednesday there will not be a check-in. I do have some personal things that are going on, and some meetings that day, so I won't even be able to record it earlier to upload. So it's just going to be Monday, Friday this week. I do apologize ahead of time for that, but I'll try to set you up as well as I can in today's video for the rest of the week here on kind of what to look for. But I wanted to start with silver because it's such a hot topic. And realistically, for a while I wasn't looking at it. I was only checking in like on the monthly time frames, for a period of time every, month or two. And since it's been running, obviously the narrative has shifted around silver and gold and all that kind of stuff. So we'll even go take a look at gold. I just think it's more interesting than Bitcoin right now, even though I will be talking about Bitcoin pretty extensively here in a moment. For gold, we got that move up to above 46 to 46.50, 46.30 in this case. Some futures on like crypto exchanges actually hit around 46.50. That's just because of liquidity. But upper second standard deviation, nice break of the highs, got above the 2414. And just locally, if we were to pull like just a real quick fib, this hit a 1272. It could continue up to like the 4660, 4665 area pretty easily, and possibly even towards this upper third. You might not be able to make the number out, but it's around 4700 to 4720 if we do see continuation. I think that it's going to kind of be a grind, kind of governed by this upper second, upper third zone. So I just track it on the way up. We see 4700s on board, 4720 on swings, pretty easy, maybe even 4750 if it does get there. Right now, the close open right there, kind of testing right in and around the upper second. Needs to hold the last higher low. In this case, that's 44.56 to the swing low right around 4400. If it did drop this and get a structural change, then we're looking, at the basis band being lost, and we're looking right back down to, I would say even skipping this high, we'd be starting to look somewhere down by that lower first, around the 4350 area to that 4400. If it did lose this last higher low down here, that would be, well, we'd be looking for a wider correction towards like 4200 or so. And so far it looks fine. This is still just a weekly correction, upper second showing, 4675, 4700's fair game to the upside, as long as it's holding right around that 4400, which is the upper first now. It could even correct all the way back down to, on the weekly here, all the way back down to 4100 or 4K and still be just fine structurally, and potentially even trying for higher lows for further upside from there. But, it's cooking. It's hot up here. And while it's getting some continuation drives in terms of hidden bullish divergence from here, it's much like silver. I would be looking for a wider weekly correction to start occurring fairly soon, maybe even within the first quarter of this year. So just keep an eye on that. Now, I know a lot are talking about like the silver trade and the Fed meeting later this month on the 28th. A lot of speculation about Powell and his statement. Realistically, for those that are, looking at what Powell put out the other day, this is a little bit of politics from him, because that's actually not what he's being investigated for. It's actually for his testimony in front of Congress. So obviously there's the mix up with Trump, at least narrative wise, with Trump being very much, putting pressure on him publicly to get rates down. But realistically, I think that's a bit of a smokescreen. And I mentioned this on a couple of spaces, but I think it's more like jingling the keys. I think that it's less to do with that because he's not going to be there for very much longer as the Fed head, although he can still remain as a governor. um, if he is charged, this opens up Pandora's box, because what likely will happen is, if there is any kind of charges for mishandling the Fed building, and then you can very easily see how this could bleed into a narrative of, okay, well, if they're mishandling the money here, what else are they mishandling, right? And I do think this is an effort to kind of crack open Pandora's box in that regard when it comes to the Fed. I think it has much less to do with rates. There's a lot of news out there about a potential, the candidates for the new Fed heads, and we're looking at May, so it's not that far off. I think this has more to do with maybe starting to look into the Fed a little bit deeper, and using his blunder in terms of testimony in front of Congress regarding the Federal Reserve building renovations. So, it's just my 2 cents on it. I think it has far less to do with putting pressure on him to lower rates. I don't think that matters. It's a vote anyway. So, let's go ahead and take a look at Bitcoin. Bitcoin, I drew this up when I was talking with Hotep on Friday. Not really going to use this. We're going to use the typical chart, but weekly is where we're going to start either way. And on the weekly here, you can see that this is just tracking sideways. This is actually not a bullish structure. This is actually a bearish setup. If you're a candlestick trader, pattern trader, you'd actually be looking for this to resolve itself back down towards the lower second, which would be a swing of the low at 80 down to 78, which is this this close over here, maybe even slightly below it, down towards that lower second. Because of the expansion down, typically you get a retest of that lower second. But as I mentioned, the weekly I do think is primed for a more sustained weekly upside move on a breakout, whether it comes from this structure here or whether it comes from a spike lower. As long as it's closing candles on the weekly above 80,525 or so, I think that's fair game to start looking for a weekly time frame bounce up to retest overhead resistances. Obviously, there's daily, 93.5 to 96, 94 to 96 or so. When looking, above this 93.5 weekly, which we have not seen closes above, then I'd be looking, there for the daily, but realistically, I'd be looking up to this low here, 98 to 101, and then we can entertain moves to 102.5, and then 105, and then 107 to 108, so on and so forth, and just take it kind of one step at a time. I did want to note that the basis band you'll see here is now in line. Of course, that's a 20 simple, is in line with this higher low over here at 98 to 101. So we are getting some confluences showing. So if we did start to see Bitcoin break out this week, especially coming into the weekly close above the high side of this low side structure here, 94.5 or so, that's more than likely going to be the destination. And that would be a bounce from here rather than coming from lower. And I think one of those two things is going to happen sooner rather than later for the weekly. As it relates to like our zones of interest, there really hasn't been a lot of interesting stuff outside of lower term time frame trades to be had. So when looking at the daily here, the opportunity for a higher low to be set, and I've mentioned this, right? When we saw, Bitcoin trade back below 93.5, what did I say? Pay attention. 89 to 90 is the area you want to see higher lows come in. We got a spike towards 89, 89.2. It's basically 89. That criteria has been met. Now you're going to see that some are calling this the higher low close, and it is. I need to see it really close above the upper first, $92,000. Start pushing 93.5 to 94 up here by the upper second. Take out the highs between 94 to go for 96. And then above there, we can start looking at 98 to 101, possibly even looking at swings above 101 to that 102.5. We see closes above there where we've either already hit 102.5, or we'll hit it shortly thereafter, going for maybe even 103, 104. And that's kind of where we'll start talking about that high at 104, 105. And then right above it is that higher low at 107, 108. And then there's a high put in at 109. And then there's the 112 high and like all kinds of crap up there in terms of resistances. But take it $2,000 at a time above 92. The upper first, we're playing between 92 and essentially 94, then 94 to 96, 96 to 98, so on and so forth. Back below 89, especially on closes, it can swing safely below here, but if we see closes, we're headed towards probably 86.5 to 86K down here by the lower second. And then below there, obviously, anywhere below 86, we're looking 83.5 to 86 as the primary area. If it loses that, it's expansion down to the next weekly. That's where we would see a retest near that lower second on the weekly, anywhere between the actual low here at 80,000, 80,500 to 78. Any kind of closes below there, we're probably pushing the mid 70s. So just be aware of that. It's been fairly boring, easy trading. If you're a trader, a day trader, or even a lower term time frame scalper, it's been fairly straightforward on the move up and then the move back down. And then it's been just kind of a boring sideways on this higher low structure that really needs to solidify itself above 90, 92 to really go for that 93.5, 94K by the weekly there. Now, looking at traditional markets, we had a green candle for the Monday session and pushed the highs, closed higher for Dow, right up against that 49.6 area. In fact, we got 49.633. I maintain, we get above there, upper second around 46.50, 46. I'm sorry, 49.6 to 49.7. If we start getting above 49.650 to 49.7, I'm going to be entertaining, possibly a trip up to 50K. That's not out of the question by that upper third, especially because this is a fairly compressed structure. I wouldn't be looking, too much above 50K initially if it got there. Maybe 50,200 or so if it was going to swing it before coming back down. Just kind of take it day by day. Needs to hold, like I said, 48,850 last week to prevent a correction down to 45 to 46 down here. So fair game if we do start to see a correction. Nice buyback off the upper first though to go and close some new highs. So it just needs to escape these highs, get above 49,650, 49.7, and it's probably pretty clear to go up to 50,000, 50,150, 50,200, and just keep an eye on it. For NASDAQ, it has yet to break out of these highs right around 25,835. Did swing it in the Monday candle. Above there looking, 25,950, 26,000 fair game. Starts to break above there. It's going to go for the all-time high somewhere around the 26,250 area and maybe even start to break out towards 26.5. And this is very, very simple. Needs to hold on any kind of moves back down around 25.5 to the basis here at 25.4. Just needs to hold that. If it is lost, we're looking 25.1 to 25,000 even. At least initially. If it did start to lose that, then we're looking all the way down, 24.8 or so, maybe even more. If it starts closing below the lower second, then we're looking somewhere around 24.5, 24.6 or so. SPY hit our 695, went for 696. You can see that just above here we've got 697.50, and 697 to 700 is fair game. Obviously, futures trading above 7,000. We could, and this is lagging a little bit from SPX as well, but realistically, we're probably looking above there, above 700, 703 to 705 is fair game on the ETF side. And I believe SPX hit our 7,000, just shy, 69.86. And of course futures hit over 7,025. So yeah, I do think that's on deck. Obviously very tight. If it does drop 688 to 687.50, we're looking around 685. Anywhere below there, we're looking back to 680. And as long as it's trading above 680, it's got opportunity to go for 700, 705. Anywhere below there, we're looking, 675, 670, somewhere around this lower second standard deviation initially, and then kind of come back to it if it did drop that, we're looking all the way down to 670, 665, in a larger correction down. And that's kind of it for Monday today. I'm not going to bore you with a lot of stuff other than taking a look real quick here at the Forex calendar. Sorry for your eyes. Tomorrow we have CPI data coming in. And outside of, some unemployment stuff this week, I think that's pretty much it for the major stuff. It's just going to be CPI data. So, of course, understand that what we're going to see is some CPI data for, month, year over year, and then, PPI data, I guess, on Wednesday. That is actually going to be important. So CPI and then PPI. So month over month and year over year for CPI, and then some month over month for PPI. And retail sales is actually going to be interesting to see what came in last month. So keep a close eye on it. There's not too much else to look forward to until the major event everyone's going to be talking about. And that's, of course, on the 28th, which is Wednesday the 28th, when we get the FOMC rate decision again. And obviously with Powell in the news, everybody's going to be talking about it now. It's probably going to quiet down as we head into that meeting. It'll probably heat up that week again in terms of narrative. But go ahead and like and share this out there with anybody that you might think may find this helpful. And I want to thank you all for hanging with me and supporting these videos and the content. Without you watching, well, I'd still be doing this either way, but I appreciate that you all find value in this, and I hope that it helps. And I find value in you guys having these discussions with me on stage as well and in the comments. So please keep that up. And I will talk to you again on Friday for the Friday wrap up. Again, Friday. There will be no Wednesday check-in. Maybe I'll throw some charts up or something on Wednesday, and if anything interesting is actually happening for Bitcoin, especially, and maybe even a few other charts when I can find some time. But other than that, you have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe, and of course, as always, stay safe. With all that being said, Landy out. Take care.